All right. Hello, everyone. Hope you're having a nice Saturday evening. Sorry for looking down at the screen there, but I need some new contact lenses. Anyway, I was just watching one of my all-time favorite movies, Rocky 3. And if you know Rocky 3, you know about the match between Hulk Hogan and Rocky. And I mean, the movie's 40 years old, but it's still great. And Mr. T is in it. And I just think the so much of it is so great. But anyway, it kind of inspired me to take a look at the chart of World Wrestling Entertainment at WWE. And I really kind of haven't looked at this much, but I figured we'll do kind of an improvisational technical analysis lesson. Now, in the real world of trading, the institutional world where I was for longer than I care to admit, I mean, more than 2 decades, it makes me feel old. We don't look at things like Fibonacci and Elliott wave. I mean, that stuff is like friggin', whatever. Personally, I think it diminishes the respectability of what we do as technicians. I mean, I consider myself a technician. What I really consider myself is a market equilibrium analyst. If I ever got business cards printed up, that's what I would call myself. Because if you're a technical analyst or a trader, what do? You analyze the market and you look at the equilibrium. If something is in equilibrium, in other words, if there's the same amount of buyers or same amount of shares to be bought as there are shares to be sold, guess what? It's not going to move. If something is out of equilibrium, then it's going to make a move. How do we know if something is out of equilibrium? It's overbought, it's oversold, it's coming off a resistance level, it's coming off a support level. All right, let's just take a look at this here. So this is the chart of WWE, and I live in Stanford, so the WWE headquarters is here. When I was younger and I lived in Greenwich, Hulk Hogan used to work out at the YMCA there, and I used to see him. I never really talked to him, but I did give him a lot of Hulkster, what's up? And he was always like, he always was pretty cool. All right, now look at this. Here is a principle that we see in markets, and a lot of times, just check out my prior video. uh, Forget about the news. Forget about, oh, this company had this new product, earnings this, earning that. Just let the market tell you what to do. The media overhypes these, news stories. The market moves because of supply and demand. It's if you can understand supply and demand, economics 101, you can understand how to be a successful trader. Now look at this. This price level here is let's take a look at it here. 47.42. I'm going to make that 47.50 just because in my day we call that 47 and a half. Notice how we got to support here and we got to support here and we got to support here and we got to support here. How does this seemingly, I don't want to say miraculous because I'm a religious person and I think, this is not miraculous. What is miraculous is the way that we're all here, the way an ant colony works. Whatever, man. It's a different conversation. How is it that the resistance, I mean, sorry, support back here became support here? Okay, so this is August of 21 and this is February of 22. And yet somehow in between these two time periods, this stock was up 29%. Well, you can't explain it on the basis of fundamentals. You can't explain it on the basis of price to sales or price to earnings. The only way you can understand it is because of understanding psychology, investor psychology. Charts are a graphical illustration of investor psychology. At least they should be if they're viewed through the right prism or whatever. I tell people, oh yeah, I'm a technician, blah blah blah. They're like, oh, you people listen to, or look at tea leaves and this and that and astrology. And unfortunately it's true because most technical analysts don't really know what the hell they're doing. All right, so anyway, why is there support at a level that was support? It happens because of psychology, because of seller's remorse. There are people who sold down here, and when the market rallied, a lot of these people are like, dude, I regret selling. The price went higher. If it comes lower and if I can buy it at the same price I bought it, sold it at, I'm going to buy my shares back. So if you have enough remorseful sellers placing buy orders at the level that was support, it can convert into support again. If you know where these price levels are, it's like having your map to the market. It helps you know where you place your orders. Just for example, say you were interested in investing in this company or trading this company, and it's at 61, and you're like, all right, well, where should I buy it? Oh, I'm going to buy it if it gets to 45. Well, you're just guessing. Okay. I mean, sometimes guesses work out, sometimes they don't. But if you said to yourself, oh, let me look at where that prior support level was around 48, well, you know what? It's probably not going to get to 45. I mean, it might, but I want to put the risk reward equation in make it to my favor. It was support around 48. There's a good chance there's going to be support there again because there are probably going to be remorseful sellers, sorry, trying to buy their shares back at the same price. Why does this particular stock like this particular level? I don't know. But the good thing is you don't need to know. Now look at this. Same thing happened with 56. Support became support again. It's the same dynamics. You can look at this on pretty much any chart. I mean, some charts it's more well defined or precise than others. But no, some of them it's not, but it's the same principles. Every stock has a different personality. Okay, now let's look at this little example here. And I'm just free forming on this. Okay, I just got inspired because I was watching Rocky 3. I think Rocky 3 is the best Rocky out of all of them. Rocky 4 is good. Rocky 2 is kind of a waste of time. Rocky 1 obviously is good. Rocky 5 is a disgrace. I forget what Rocky 6 is. Anyway, I love Sylvester Stallone, but let's face the facts. It's like the dude's been in 100 movies, and it's like he had like three great ones, like Rambo, for First Blood, like Rocky 1, Rocky 3. He's also been in some absolutely horrible movies, most notably Rhinestone. I'm not going to waste your time on that. But now look at this. Here's another kind of thing we see. Why is it that this level that was resistance around 73.70 somehow incredibly becomes support here? So it's resistance in August of 22. We'll call it 73 and a half. Okay. And yet it becomes support here. How is it possible that that happens? It seems to be like, wow, if I listen to CNBC or if I listen to my finance professor or whatever, I can't explain how a level that was resistance can convert into support. But if you understand that we're looking at psychology, oh, and by the way, just throw this out there again, a level that was support became support again. How can resistance become support? It's psychology. Okay. There are people who sold who are remorseful when the price goes higher. So this is another dynamic of the market of seller's remorse. Seller's remorse can keep support intact for a while. Seller's remorse can also turn resistance into support. There are people who sold here that are like, dude, I made a mistake. When the price goes lower, it goes higher. Actually, I take that back. There are prices that go lower and they're like, wow, I made a good move. But then when the price breaks above that level, it's like, ah, man, I made a mistake. I'm going to buy my shares back if I can get them for the same price I sold them at. So you have remorseful sellers placing buy orders at the level that was resistance. If there are enough, resistance will turn into support, as happened here. This is not an uncommon phenomenon. We could pretty much look at almost any chart of a stock that's traded a lot, that's liquid, and we see these same principles. And people say to me, like, you know, why is it that we see these same patterns on charts of different stocks? And the answer is we are looking at a graphical illustration of investor psychology. Whatever stock you're trading, whatever crypto you're trading, whether you're long term, short term, regardless, you have psychology. If you look at a chart through the prism of psychology, they're going to be easy to understand. If you don't look at it through that prism, and if you start thinking about, oh, price to earnings, this, that, and the other thing, you're not going to be able to figure it out. Look at this. November of 22, resistance, March of 23, support. You don't need to be a market guru or a former hedge fund trader. And, former hedge fund traders seem to be a dime a dozen these days. And we can see that here. Resistance here became support. I actually was a former hedge fund trader. As a matter of fact, I was an institutional trader. In my role as the head of trading at a couple different money managers, we had different hedge funds. So I've overseen the trading of probably 12 or 15 different hedge funds. And let me tell you something, it's not that big of a deal. Okay. There are traders that were hedge fund traders that don't know what the hell they were doing. So don't believe the hype. Just because someone's like, oh, I was a hedge fund trader, blah, blah, blah. There are hedge funds that go out of business every day. There are hedge funds that have bad performance. I will say this, fortunately, whatever. Um, I was blessed to be in the right place at the right time, and I learned from some of the best ever. But anyway, that's it, folks. I don't want to take up your Saturday night. My recommendation is go watch Rocky 3. Great movie. And check us out on Monday morning. And also, please follow us on YouTube because once I get up to, I think, 1,000 subscribers, I start to get money. Woohoo! And let's not forget, this is Wall Street. I am a capitalist. All right. Thanks, everybody. I will talk to you soon.